While AI giants like NVIDIA and Palantir dominate the spotlight, a lesser-known name is catching fire: BigBear.ai, trading under the ticker BBAI. You may not have seen it topping headlines, but this stock has been quietly surging, drawing attention from retail traders and institutional analysts alike. Could this be the next big AI breakout, or just another name riding the hype? BigBear.ai specializes in predictive analytics and machine learning, delivering mission-critical insights for government agencies and private sector clients. As AI demand continues to soar, BBAI's strategic positioning and rapid stock momentum have fueled a wave of speculation. But does the data back it up? Let's unpack what's really driving BigBear.ai's rise, and whether it's time to load up or stay away. BigBear.ai focuses on decision intelligence, merging AI, machine learning, and real-time data fusion to help organizations make faster, more accurate decisions. Unlike generic AI providers, BigBear zeroes in on high-stakes environments, from battlefield logistics to cyber defense and predictive supply chain management. Its core platforms, like Orion and Vane, are designed for defense agencies, providing readiness assessments, mission planning, and even adversarial narrative detection. Meanwhile, its AI modeling tools extend into logistics and cybersecurity, using anomaly detection to safeguard critical infrastructure. In short, this isn't just an AI company, it's a defense-grade intelligence platform provider, deeply embedded in systems where failure is not an option. That makes BBAI more of a focused operator than a speculative AI play. BBAI's stock has surged nearly 7x from under $1.5 in mid-2024 to over $10 in early 2025. This explosive rally stems from a combination of earnings momentum, major government contracts, and a flood of retail investor interest. Quarterly revenue growth has been modest, around 5 to 8%, but its backlog has soared from $168 million in 2023 to $385 million in 2025, signaling deeper federal adoption. Major wins, like a $33 million per year U.S. Army contract and a $13.2 million Department of Defense award, show BigBear is becoming a trusted AI supplier at the highest levels. At the same time, BBAI has become a favorite among retail traders on platforms like Reddit and StockTwits. This blend of real contract wins and social buzz has created a perfect storm of momentum, but that doesn't mean the fundamentals can be ignored. Let's break down the numbers. In 2024, BigBear.ai reported $158 million in revenue, up just 2% year over year. Fourth quarter revenue was $43.8 million, showing some acceleration, but profitability remains elusive. Net losses ballooned to $108 million in the fourth quarter 2024, a steep jump from $21 million a year earlier. Gross margins have improved to around 37%, and the company posted a modest $2 million in non-GAAP EBITDA. However, free cash flow is negative, and the company holds $142 million in convertible notes, with only $50 million in cash on hand as of late 2024. Debt-to-cash ratios have improved through warrant conversions, but the risk is still considerable. Despite trading at a forward PS ratio of around 4.4x, reasonable for AI, the stock remains volatile, with a beta of 3.2 and a short interest of 26%. That's a lot of pressure from both sides of the trade. In essence, BBAI has big ambitions, but the financials still paint a picture of a company in early innings. Investors should watch whether revenue growth and margin improvements can keep up with the surging valuation. BigBear.ai isn't just sitting on contracts, it's actively expanding its strategic footprint. In March 2025, the company landed a $13.2 million sole source contract with the Department of Defense to upgrade its Orion platform. It also secured a 5-year, $165 million contract with the U.S. Army for its Global Force Information Management System. The company is also part of a $900 million Air Force contract vehicle, allowing it to compete for AI work over the next decade. These moves not only increase revenue potential, but also deepen BigBear's integration into long-term government programs. In the AI space, comparisons to Palantir and C3.ai are inevitable. While BBAI is smaller in scale, just $160 million in annual revenue compared to Palantir's billions, it stands out in its focused defense niche. Palantir serves both commercial and government clients, while BBAI is laser-focused on military-grade applications. Valuation-wise, BBAI's forward PS of 2.4x looks cheap compared to C3.ai's 11x or Palantir's even higher multiple. The Pangiam acquisition also gives it new growth verticals in biometrics and commercial security, diversifying beyond its defense core. Still, BigBear lags behind in scale, margins, and brand recognition. Its gross margins hover around 30 to 40%, while Palantir enjoys margins near 80%. And while PLTR and C3.ai have deeper commercial pipelines, BBAI is still early in its non-government ventures. Despite risks, some investors believe BBAI is just getting started. With a forward PS ratio lower than its peers, recent government wins, and growing institutional ownership, the stock could be undervalued if growth accelerates. Institutional support is rising, with over 110 million shares held by funds as of April 2025. Analysts like H.C. Wainwright have boosted their price targets, citing backlog growth and solid contract momentum. Retail enthusiasm also fuels the bull case. BBAI has surged more than 400% YTD, and technical indicators remain strong. Combined with analyst upgrades and solid federal deals, bulls see a recipe for continued momentum. Skeptics highlight BBAI's lack of profitability and limited commercial reach. The company is still bleeding cash, and while its addressable market is huge, it's barely made a dent. Competition is fierce. Palantir, C3.ai, and others have deeper client bases, more mature platforms, and better margins. BigBear must deliver flawlessly to stay in the game, and any misstep could be costly. Ultimately, BBAI is a high-beta, high-risk stock. It may reward brave investors, but it could just as easily collapse under execution risks or shifting market sentiment. So what's the bottom line? BigBear.ai is an intriguing underdog. It has real government contracts, expanding capabilities, and growing attention from institutions and retail traders. For investors looking for an AI play outside the mainstream, BBAI offers exposure to a unique corner of the sector. But this is still a speculative bet. The path to profitability is unclear, the financials remain shaky, and the company is playing in a highly competitive, fast-moving space. If BigBear can scale beyond defense and deliver commercially, the upside could be substantial. If not, it may fade as quickly as it rose. So we'll leave you with the big question. Is BBAI the next breakout AI play, or a stock that could crash just as fast as it climbed? If you're betting on BBAI's climb, hit that like button, subscribe to Stocks Telegraph for more deep dives like this, and let us know in the comments. Are you backing this AI underdog or waiting on the sidelines?